Okay, now we're ready for the last set of sessions at NPC before we conclude. And to run this whole part of the session is Ajeet Khurana. Ajeet is the CEO of the incubator at IIT Mumbai. He's also an advisor to Kalari Capital and II5 investors or ventures in Hong Kong, correct? Ajeet, please take it away.
If my mic can be turned on. Hi guys. So all of those things you heard about me are things I have done in the past. Eventually I was found to be not good enough to do any of those. So then I decided why not address audiences like you. As in that probably seemed like something I might manage. Last year I did a panel at the NASSCOM Product Conclave and audiences such as you are very kind and they come and congratulate panelists and say, oh, good job. And if you ask them, what specifically did you like? They usually have nothing specific to say. Right? So what I told the organizers was, and the organizers are people like Ravi Gururaj, Devika Puri and other great people at NASSCOM. I said, you know what? I think sometimes when you do an event for 2 days, such as we have done today, we run into the risk that we hear the same thing again and again, and we start feeling we knew all of this before. So other than the networking benefit, we wonder whether we gained anything. So enough of gyan, we need anti-gyan. And that is what has, over the course of the last 12 months, culminated in these 3 sessions which we are about to begin. Not going to give you too much of an introduction, except that what we are going to do is have 3 rules. And whether we met those 3 rules will be evaluated by you in a very interesting fashion, which means all of you will be part of this. But before I jump into that, let me stop enjoying the sound of my own voice and invite the 3 panelists. First, I'll call upon stage Taher, Khorakiwala. So it's customary for people like me to ask him, how would you like me to introduce you? And he just keeps saying all these bad things about himself. I said, I can't say any of those, but serial entrepreneur, aspiring investor as he calls it, I hope to hear great things from you, Taher. Have a seat. Next on stage is Anirudh Damani, person who has made 45 angel investments already and is looking to make at least 45 more, hopefully 2 of them before the evening is over. So entrepreneurs, please mob him before the evening is over. Anirudh Damani comes from a family which is one of the royalties of the stock exchange business in India. And as a new generation or next generation guy, he's moving into the startup space. Let me next call, who's this guy? I've never heard of this guy before. What does this say? I can't, it's like, what is this, Shah Rukh Khan? Somebody who everybody knows, Ganesh, Krishnan, where are you hidden? Please, sir. So here's one good thing I like about Ganesh, and he tells me I'm not necessarily right, but I feel that anything he touches becomes gold in the startup space. Right? So I'm going to establish some ground rules, and these ground rules are not just for panelists. Here's how you will participate. So first thing is that nobody is allowed to give general gyan and say things like make sure you're solving a problem or focus on the customer, which are absolute truths. There is no untruth in them, but we have heard them too often. Second thing is that we will try to be as insightful as possible and to the point. And the most important thing that you have to all appreciate is that we are beginning to talk about angel investors. In fact, this panel is titled, What Were You Thinking? Hey, Mr. Angel Investor, what were you thinking? So what we're going to do is when we are, for instance, let us say being critical of angel investors, we are not being specifically critical of anybody on the stage. Right? So keep that in mind. Oh, well, I'm not saying I said we are not necessarily being. Yes. So we might also be. What you as audience members will be called upon to do at the end of this session, and we don't have one of those countdown timers, which is scary because I could go on for 2 hours. So I'll use my phone for that purpose. Oh, there's one there?
But it's facing
never mind. So you will basically tell me to shut up. Thank you very much. So at the end of the session, here's what we're going to do. Usually people on the stage are never put to a test because we are the gurus, right? So we are never put to a test. So we will independently for Ganesh and Anirudh and Taher, I'll keep myself out of it because I'm speaking and you are at this point listening. But you will, with your show of hands, say, how many of you think, I'll ask you, how many of you think that you learned something from Ganesh today? And you will actually raise your hand if you think you did. And likewise with the other speakers. So are you guys ready for it?
Yeah.
Okie dokie. So I'm going to throw out questions. I want one of you to respond. And the second response is welcome only if it is contradictory to the first one. Probably, by the time this session is over today, we will actually remove the word angel investor from the investors dictionary entirely. They maybe not really deserve the word angel in front of them. We will go with early stage investor, seed stage investor. Let's see if they're angels. Because I'll tell you what bothers me, and this is where now reactions have to come in. I find that as a class, angel investors lie a lot.
Yes.
Do you believe that? Because the thing is, for example, one of the common things they'll tell founders is, at the investment stage, valuation doesn't matter, but the only thing they want to discuss is valuation. Then, here is something that is a really pet peeve of mine, and Ganesh, I want you to react to this. We pretend that other than giving some minuscule amount of money, we add a lot of value. And when I talk to founders, they say, yeah, there was a lot of nuisance value coming from the angel investors. So Ganesh, do angel investors, and again, note, I'm not asking you what you do, though you can use your examples. Do angel investors add value?
Yeah. So firstly, I think it's good. Angel investor is a oxymoron, okay, right? So instead of angel, you should call it devil investor, okay, right? So in terms of terminologies, you don't have to wait till end of the session. No, I find this entire concept bizarre. First of all, you want to take money, okay, right? And you want to then expect me to add value also, okay, right? I think that's okay. Okay. Now that genuinely is asking for too much, okay, right? One. Two, I think you should take the money and run, okay, right? Trying to wait to add value. In my opinion, if we are able to not distract value, I think we have done a great job, okay, right? Because we given the money, okay, right? So I think the expectation is wrong, the terminology is wrong, and I don't think we should expect more than that. If it happens, in some cases, by accident or in very unique situations, it is great. From my opinion, I think it's job of angel investor to give the money and to be available in case specifically asked for specific introduction or specific areas of expertise. If they seem to have, they do that stuff. And finally, I'd say at the angel stage, there are so much of variable and so much of unknown. Any amount of guessing or adding value and all that stuff, it's a wrong expectation. Just put your nose to the grind, take the money, execute it. Don't even ask too many questions. Don't expect value adds unless it's a very specific transactional.
Cool. So basically, you and I are both of the opinion. Anirudh is going to contradict us, and if he doesn't, I'll force him to. In that, there is no such thing as an angel investor. You call them a devil investor, and the fact that it's an oxymoron. There's a lady sitting on the front row here, So I met her about 20 years ago, and we talked about love marriage. So I said same thing. First you want me to love you, then you also want me to marry you. Coincidentally, she's my wife. Simran, please give her a big hand. Thank you very much. Okay, Anirudh. So value add. I have talked to some of your investors, and though I said I won't make it personal, in your case I have to. There is this thing called investees, sorry. And there's this thing called mentoring which you are famous for, and as much as angel investing is a sham word, I think mentoring is the word that takes it to a new level of sham. But what do you think mentoring is about, and how do you add mentoring value to your investees?
So I think I'm not famous, but infamous for it. Right? So it's a very common misconception that mentoring means somebody who sits and just says yes to you all the time, right? And actually, I started off as a pure angel investor, just doing just financial investments, and then I realized, okay, maybe I can add some value. Maybe I can at least get some of these founders to look at KPIs and at least start understanding how to present what they're doing. And I have a very particular harsh way of managing my own people. So you can imagine I'm much more harsh on these entrepreneurs. So they may or may not like it. However, seems like they've been getting good results, right? So now that the question comes up, okay, where does the angel investor end and where does the mentorship start, right? Because as an investor, I have to nurture this guy. As a mentor, I have to wrap the guy, right? I have to keep making sure कि तुम इतना burn नहीं करने का, okay? Keep your burn in control. Why are you hiring this guy? What are you doing, right? As an angel investor, I'm not trying to get involved. However, I think that all angel investors should not even try to become mentors. None of them, right? That's my personal opinion. That either become an angel investor or become a mentor of the company. When you do both roles, I think you end up contradicting yourself at most times. Sometimes what is good for the company may not be good for the investor, right? And sometimes what you want or what you see as the vision for the company that you have sold to yourself and dreamt about with the founders may be completely contradictory to what the investors want. But at the end of the day, your responsibility is towards the company and not towards the investor. And that is the role of the mentor, right? And versus when you're also an investor, suddenly you're leading the company, now the investors are looking at you, "Arey, ye kya kar rahe ho?" Why you are acting against our best interest?
So you are getting to a point where pretty much like how I and Ganesh said that you basically are saying angel investors should give money, not try to add value. They could supervise, they could audit, they could be a board member.
That's it.
But as an angel investor, you should not even be expected to add value.
I absolutely agree with that.
Cool, guys. Are you hearing something new here today? All of these angels who keep telling us about the fact that, this is not dumb money, this is somehow smart money. We are actually sitting here and confessing, hey, that's not really true, right? So let's move to you, Taher. You have been an angel investor, you've been an entrepreneur. Often people are first entrepreneurs and then angel investors. You have done it both ways. Entrepreneur, then angel investor, then entrepreneur. Surely like the rest of us, by rest of us I don't mean these four guys, but all of us here, you have some real pet peeves, right? As in we have some problem with angel investors despite being them. What are those?
Good friend of mine calls most angel investing clubs men's kitty clubs, right?
Kitty party.
Yeah, kitty parties. No, one of the main pet peeves I have, and I have it with myself, is that whenever I get pitched, I start thinking of how should the business model be different. And that I think is the fundamental problem of an angel investor, is they try and start messing with the mind of the entrepreneur. So my pet peeve with angel investors is that, like, invest in this guy, great team, and we'll get them to pivot, don't worry. And I agree with Ganesh, what he's saying is that you just give the money if you believe in the team and that they're good enough for pivot. I think the only mentorship you can give them is if you can be their agony aunt. I have this problem, can you help me? Not go after them. And that, when I look at my basket of failed investments, I always see that we've over-interfered in that, and we've kind of destroyed the confidence of the entrepreneur. So fundamental pet peeve is, I think we think that we know their business better than they do. And that's the only reason that we are investing.
The very structure of how angel investment comes about, I think leads to a problem, and this is open to anybody who chooses to jump in. Primarily my problem with this is that before signing the deal and giving money, we are negotiating hard how much money, what tranches, milestones, valuation, etc. Which means we are sitting on the opposite sides of the table and really fighting and getting a deal together. And then suddenly we are all expected, entrepreneur and investor alike, to suddenly now become part of one team and say, oh, now that we have decided to be part of the same thing, let's work together. But I think that the very act of coming together creates a frictional situation which prevents a great relation between an investor and the investee. Is this your experience, or do you disagree with it? Anybody?
No, I personally don't agree with that. I mean, at least my own experience has been, unless you go to these, I'm not specifically speaking for Mumbai Angels or against Indian Angel Networks, go to these places where there are 200 angels forming a group, and you go and present, 25 people will comment on the group, 20 people will discuss about the thing, and they will talk, then they will put 5 lakhs from their own pocket, okay, right? So, while it started off as a nice one, given just the sheer size and scale and the process becoming moronic, it has become very difficult for angel to be true angel. The intention is they will not go through the same dog and pony show and the process that institutional venture capital will go in. It will be quick. It will be lot more based on the fact it's really early stage. You like the guy, you like the sector, you want to put smaller amount of money which you can bet, and you're going to put across 20, 25 companies, so it's not going to, you're not betting your farm, and you're not responsible, this is your own personal money from your pocket, which you, to the extent that you're willing to risk it. So it is supposed to be nice and smooth process. Somewhere what has happened because of the hype and the stuff that has happened, a lot more angels have come in, not just the actual angels who have done entrepreneurship, right from real estate guys to various stuff. I have nothing against real estate guys, okay, right? Everybody has come in, okay, right? And whenever they read in newspaper about valuations, other people want to, aunts and uncles want to jump in, and neighbors. So everybody wants to jump in. And this group has made it very difficult for what you're saying to happen. It's more, I think, a function of these networks and network groups that have made the process difficult, slow, too much thing than what real angel investment is supposed to be. Supposed to be you like it, you have one discussion, one meeting, have a coffee, and then actually sign the check. Not make them present to the secretariat of the network and then present to the selected people and have one of those 20 people representing you on the board and have 20 signatures there, all of that stuff. I think minus that, I don't think there is conflict on both sides. Whatever angel investments I have done about 25, we have sat and we have discussed and we have done it and done that stuff. And that's what is my opinion.
Cool. So I'm actually going to extend that question because what you have done is you have brought about a differentiation between angel investor and angel investment network / group. Right? So Anirudh, I know because you and I are co-invested in some deals. We have done what he called moronic, I'll see you outside. What he calls moronic level ways of investing where you start with like 200 odd, keep funneling them down and pretend, as a VC wannabe, as in we are like, someday I'll grow up to be a VC, so today let me start pretending like one. Do you think that angel networks investing per se is in any way different, forget better or worse, than individual angels investing?
I'll just add, see, if the network was 10 or 15 or 20 people, it was still okay.
Cool.
Now you're talking about 100 people, 200 people. I mean, that's where the difference comes. Yeah, go ahead.
I'm going to extend that. So we actually invested in a company where the total number of investors wanting to come in was greater than 50. And this was at a time before Companies Act 2013. Namely, if you had beyond 50, you would have to become a public limited company to accept that money. We went through that process because more than 50 people wanted to come together to give 4 crore rupees, right? So now.
So I'll tell you, I've been in a couple of very interesting and tricky situations recently. So earlier, when there was a network of 15 people, you know each other. So you sort of have a similar or some level of trust within each other. So if Ajeet says, you know what, let's get out of this company, we have to exit, then it's like, okay, ठीक है, फिर कर लेते हैं. अब क्या हो गया? I have one company where there are 40 investors. Okay, out of 40, 39 are ready to go. They're ready to exit. One investor says, मेरे को exit price नहीं पसंद है. अब क्या करें? And then unfortunately this is one of those term sheets where or one of those SHAs that doesn't have the 75% drag along clause. Okay, so now you're like, man, exit mil raha hai in a tough environment, why the heck can't we get out? And we're really racking our heads. I have met the guy, the founders have met the guy. I mean, I think even the head of the angel networks have met the guy, but this guy is not refusing to budge. And since none of us actually have a personal relationship with the guy, I'm thinking, really, was there any network? How do we find this guy in the first place? ये आया कहाँ से, right? बाकी सब लोगों का तो पैसा इतना पड़ा है, उसका सिर्फ 3 या 4 लाख रुपए पड़ा है.
He must have attended the NPC somewhere and while going would have said, here is 10,000 rupees, I'll leave it.
And so I think to that point, it's so correct. It's not just about entering a deal. We need to think about the exit part of the conversation as well. And there is always going to be somebody who's going to have heartache. Right? We were involved in some pretty big exits as well, and it really was okay. We gave 3 people out of the entire group, the 13, 14 of us, कि आप 3 जन को handle करना है. Whatever you guys decide, we will blindly follow. Right? I think that is where the network is powerful. But when it becomes 40 investors from 3 different angel networks, where one guy from one angel network that you have no idea who he is, you're the lead for everybody, and that one guy is causing a problem in the entire operation of the company, or in the exit for the investors, I think that is where the network really breaks down.
Yeah, but this blindly follow thing also is bothering me. But I'll pick on that probably later because I'm being flashed those numbers from there.
So I just want to add one point on this, and it's a little different point, I think, and I've invested both in India and the US, and I think fundamentally the big difference is the power structure between the angel and the entrepreneur. And we don't celebrate entrepreneurship the way it is celebrated in the US. And I'm using the word celebrate not just as a buzzword, and in terms of giving power. And the fundamental way they give power to the entrepreneur is they don't sign an SHA, they give a convertible, where the entire power of the next round of where you want to take this company, this exit problem you're talking about, as an investor I don't have control, because I'm just signing onto a convertible and he's going to convert when he wants to take it the next level. So all this, and he can have it as an open convertible, so he doesn't have to keep waiting for all the signatures to come in and then that money to come in, etc. So I know it's a little bit technical compared to where you want to keep this, but if angels are willing to move from an SHA to convertible notes, or what is even beyond a convertible note, what's called a safe note, which Y Combinator has done, I think we will change the power structure, and angels can actually be angels at that point, like, bhai, upar wale pe chhod do.
Right.
Right?
angels also fly in the upper area.
But there is another Uparwala
No,
above that.
that's a problem with Angel, right? When you have 20 people contributing 5 lakhs each or 10 lakhs
It's
each and
a
all
waste
that
of
stuff,
time.
it becomes, you will find that when the company is in trouble or the company is, needs somebody, then all the angels have gone to heaven.
Yes.
Right? There's nobody on earth, okay, right? They're circling earth between that. It's very difficult in terms of sheer number to handle. From your point of view or from an entrepreneur point of view, if you're wanting that 2 crore, 3 crore, go to a small early stage fund, really your fund which are stage pre-series A, seed stage funds, go to those, and many of the big funds also start dabbling in 500K investments. I mean, have one people and do that stuff. There's no guarantee that they will support you in terms of trouble, but at least they're available, they're discussing their skin in the game. It's not distributed across 40 people, 20 of them will not be there in the country. Why do you want to take the trouble for 2-4 crores? Don't do it. Go and do that. That is my minimal.
Correct. So taking it beyond just the nature of the deal, so this entire session is supposed to be 30 minutes. We are already approaching 25. So after this last point, we'll be moving to audience Q&A. You know, other than the nature of the deal, one of the problems I find is in the area that you talked about how investors view entrepreneurs, and where I have been mentor, often I get the feeling that in talking to entrepreneurs, they find that investors often treat them as if the entrepreneurs were the investor's employee. In terms of, saying, give me this, why don't you do this and then come back to me, etc. They start dictating terms. Have you seen that? As in, do you have an opinion about that?
I've done that.
You have done that. So this is the guy we need to beat up immediately after this session, right? Yeah, but tell us more about that and how you learned your lesson.
No, so you see, when I was an entrepreneur, I was on the other side, right? And luckily, in my early stage of entrepreneur, I never dealt with VCs because I was the tech guy and I had a CEO. And you kind of figure, okay, now I know how to build companies. I can give gyan. And I think that's the thing, right? When you go to an angel or an angel network and they feel that they have something to contribute to you more than, as Ganesh said, a paycheck, you've got to be very, very concerned. Because then they start interfering. So one of my first few investments, I remember very clearly that we kept pushing the guy to do certain things that he intuitively was pushing back against. And it didn't augur well, obviously, for us, but for him also.
Correct. In fact, one of the fundamental problems here is that angel investors tend to have more age, more money, and more experience. As a result, there seems to often be a situation where entrepreneurs feel, maybe he will give me something, tell me something, or I should listen to him. I think that might be at the heart of it. But having said that, do we have somebody to run around with a mic? We're going to take like just 2 or 3 questions, because immediately after we have done this, in our next session, we are talking about the anti-gyan related to startup media and reporting. And we know we hate these reporters, right? They're already in the audience. I can see Aba Bakaya here. I can see Harshada Sawant here. I can't see Pooja, but she's here somewhere, I know. So before that, I'm going to take 2 questions around angel investing. We are going to give you the most honest answers. So quickly raise your hands if you want anything. Okay, so it seems like we have okay, there we have one person. The rest of them are Purna Gandharva, which means completely enlightened. Nothing else can be learned. So pass the mic to this gentleman here. The mic is running towards you. In the meanwhile, if there is one more person, you can make your hand felt. I'll make sure the mic reaches you. But here's your first question. You can either address it to somebody specific or pose it to the panel.
Yeah, nobody specific, to the entire panel. Is there any idea for fund of funds kind of a thing where one investor, angel investor wants to get out and the rest of them don't want to get out? So can the person pass on the money to somebody or exit and sell it off? Question number 1. Second, why Y Combinator is becoming so much of a happening thing, and why IAN cannot become like Y Combinator?
So anybody wants to answer one of both of those?
You answered the IAN one. You're still there.
Yeah, he's part of IAN, so you're now their spokesperson.
I'll take the first part.
But no, so I think to answer the question about Y Combinator and IAN, right? Y Combinator gets more involved with the company. IAN is more of an angel network.
It's a different model.
It's a whole
business
complete
model.
different, complete different business model, complete different way of working. And honestly, I think better than me, you can just go to the individual websites and you'll understand the both models that they follow, and you'll see the major difference there. In terms of the first question, I think what I understood was that if one person wants to exit in 39,
it's basically a secondary market. He's asking.
yeah, is there a secondary market?
Aftermarket.
Yeah, there is a secondary market. It happens all the time. In fact, in Western markets, there are actual funds that have been created to buy secondary shares. which is in India it's too early because we're not, I don't think we have that many deals to go after, but definitely there are secondary markets, there are people who will buy secondary shares if few want to exit and others don't.
But actually, that's a good point. It doesn't exist there's no visibility to it, and there is no transparency to it. So
see, last year when the whole boom was going on, there were 2 or 3 sets of people who were trying to set up a secondary market platform, not just for buying of this, also for employees, ESOPs, which are vested, which are that and all that stuff. Not yet seen the light of the day formally yet, but there were 2 or 3 groups who are doing it. Hopefully it should come up here because there are a lot of vested stock which I value, which are available, and the example that you gave where somebody wants to exit, there may be somebody else.
Perfect. We didn't even realize it, but we have consumed a solid 30 minutes. Can you believe it? So how many of you feel that Ganesh added value and you gained from listening to him? How many of you feel that Anirudh added value and you gained from listening to him? I can raise only one. Taher added value.
Come on.
There is no fourth question.
Okay, from the panel, did he add value?
Okay. Thank you very much, guys. We are moving to the next session, which is on media. But before that, please give these guys a very big hand. Thank you, Ganesh. Oh, she's running up on stage with some gifts.
Thank you.
So there's one for, you go ahead and give it. One for Ganesh and Anirudh.
Thank you.
And Taher. Thank you very much for all of you being here. I'm going to invite my next panel up. Okie dokie.